Look at any asset over a long enough timeline, and you'll notice a frustrating pattern. The market spends the vast majority of its life doing practically nothing, drifting sideways without a clear direction. For anyone actively trading, this dead zone is a trap. If you try to enter a position while the price is stuck in a narrow range, you end up getting chopped up by erratic, random price swings that slowly erode your capital. Filtering out that market noise has been a century-long struggle. If you stood on the floor of an exchange decades ago, the raw density and physical chaos of traders yelling over each other made it nearly impossible to find a clear signal. Today, the chaos is digital. We trade through screens, but the problem of being overwhelmed by data and false signals is exactly the same. To cut through this noise, legendary trader Bill Williams built a specific mathematical filter. He designed the Alligator Indicator to keep traders out of flat markets and signal exactly when real momentum is building. Surviving financial markets doesn't require constant trading. It requires a system that enforces absolute patience, keeping you on the sidelines until the mathematical conditions for a trend align perfectly. This indicator uses 3 forward-shifted moving averages. The blue jaw is a 13-period average shifted 8 bars forward. The red teeth is an 8-period average shifted 5 bars forward. The green lips is a 5-period average shifted 3 bars, reacting to live prices. Layering these 3 specific forward-shifted timeframes over each other creates a dynamic visual filter. By watching how these lines interact, you can map the buildup of market momentum in real time. Williams used a biological metaphor, starting with the sleeping phase. Here, the moving averages are tightly tangled, and the price chops back and forth. When lines are intertwined, the market is range-bound. The rule is uncompromising. Absolutely no trading. Eventually, the lines spread apart in the awakening phase, led by the green line. A bullish entry triggers when it crosses above the red and blue lines. This begins the eating phase. The lines fan out widely, sloping upward, marking peak momentum. Validate trend strength by watching the price. As long as it rides above the lines without crossing back, the trend is secure. Eventually, the satiated phase triggers. The price drops through the averages, forcing the lines to converge. Momentum is dead. Exit your position. Tracking these 4 phases turns the abstract concept of momentum into a strict visual rule set, dictating exactly when you should enter and exit a trade. Because the alligator is built entirely on moving averages, it carries a built-in limitation. It is a lagging indicator. It won't predict a trend before it starts. Instead, it acts like the trailing wake of a speeding boat, confirming the direction only after the momentum has already hit the water. This delay means high volatility news events can be dangerous. A sudden, erratic price spike might cause the lines to temporarily cross and trigger a false signal, dragging you into a trap. To filter out that localized noise, you shift your analysis to higher timeframes. By zooming out from a volatile 5-minute view to a 4-hour or daily chart, the indicator smooths out and provides much more reliable signals. To verify that a trend actually has strength behind it, you must pair the alligator with a secondary momentum oscillator like the MACD or the RSI. Many traders also combine it with Bill Williams fractals. When a fractal forms directly above the alligator's open lines during an uptrend, it creates a highly calculated breakout setup. Mastering this visual filter shifts your mindset. You stop acting as a reactive victim to market chop, and instead become a patient predator waiting for undeniable mathematical alignment. Open up your trading platform, apply the alligator settings, and look for a market